Good morning, everyone. Can everyone hear me?
Yes.
Very good. So we're going to get started here. I first want to thank everyone for joining our first ever kickoff PZM Essentials webinar. And before we begin today, I want to explain a little bit about myself. So my name is Dan Ba, and I am a precision business planning specialist at AgSolver. And my role as a precision business planning specialist is to help channel partners, producers, help create their precision business plans for their fields within their operation. And I graduated from Iowa State University back in spring of 2015 in ag studies and then also agronomy. I'm going to turn down my headset here and an echo. So in today's webinar, we'll be going through Profit Zone Manager, covering the basics of how to getting comfortable with the application, and then also just kind of describing how everything works and so on. Any questions before we begin? So I've already logged into Profit Zone Manager, and when we log in, on the left-hand side of the screen, we'll have a list of all of our enterprises and where each of them are located on the map here. And so, within Profit Zone Manager, if you're a channel partner and you have a customers that you're working with, you'll have their enterprises, or if you're just an individual farmer, you'll only see your specific enterprise on this page. We'll go down and click on my enterprise called Dan Ba. Now we're viewing the enterprise dashboard of Profit Zone Manager. On the left-hand side, we have a list of our fields, and the majority of these fields are located in northeast Iowa. I do have one test field out in eastern Illinois. That's why the map's spread out so large. The closer your fields are together, the map will zoom into those individual fields. We'll go ahead and click on the Lincoln field. And I want to explain a little bit further about our operation. So I farm with my dad and brother, and collectively we farm about 1,300 acres. We're in a corn, soybean rotation, and we're also no-till. How we already got to what we're looking at here, which is a profit map of the Lincoln field, we've already loaded machine data from 2011 up into 2015. What we've done here is we've taken our 2015 yield data, coupled it with our 2015 crop budget, and we have a 2015 profit map that we're viewing here. To step into what the budget looked like for this field, so we have a commodity price of $8.50. Other revenue, for this we put this at 0, but you could add a insurance payment, PLC or ARC payment, or if you have a conservation, you can add a CRP scenario into this column also. Scrolling down to our next expense line item, we have an equipment expense, and for our operation, we have it divided out per equipment. So we have our combine separated from our planter, separated from our sprayer to the grain cart, and we can get very, very high depth with these budgets through these subcategories. So if we click on the plus sign, we have drop-down menus, so where we can add tillage, irrigation, or other. Below our equipment expense, we have a seed expense of $55, fertilizer, herbicide, insecticide, insurance, interest, grain drying, handling, and hauling, land, labor, overhead, home, and personal. And this is for those home or off the farm expenses where we can add those and then finally them higher. We can also save this budget to a custom template. So if our budget costs relatively across the same acre over every field, we can quickly one click plug in this budget and we have it populated for our field. So when we scroll down, below our profit map, we have our financial field performance table, and this is a 31-acre field. And for 2015, this field actually produced pretty decent. We produced 60 bushel soybeans on this, but when we look at our commodity price, we still lost right around $31 an acre. Had a negative ROI of about 6%. Next, our production efficiency. Production efficiency is bushels produced per $1,000 spent. So it's a little bit different than thinking in bushels produced per acre. So on this field, we were able to produce 110 bushels soybeans per $1,000 spent. When we look at our acreage opportunity ratio, 68% of this field was spent against a negative return. Unprofitable, it was meaning 68% was spent against a projected negative return. Our working capital opportunity is $11,543 spent against a negative return, and then total field expenses of right around $17,000. Total field revenue of $16,000, and then we have a total field profit of negative $1,000. When we come down right next to our financial field performance table, we have a histogram comparing our acres to profitability per acre. And what this allows us to do is see how many acres are in each column. So if we just want to see how many acres broke even, right here we have 17.66 acres. We want to view the acres that produced a profit, we can so on and so forth. After our field performance distribution histogram, we have a pie chart of showing where our expenses are going within this field. Within our operation, some of our major expenses would be land, seed, machinery, and then fertilizer, depending on which crop that we're planting and growing. And then you can hover your mouse over and see which percentage is taking up of the pie chart. We also have another tool called Zone Finder, and this allows us to filter the field based on percentage of return on investment. So say we want to filter this field at 0% return on investment and just see where we're breaking even on this field. Click filter. Anywhere you see in green is we made a profit for 2015 on this field. Anywhere in gray, we didn't make a profit, or it was below that negative 0% return on investment. And this is adjustable from negative 100% to a positive 100%. Adjust this down to negative 5%. Area gets a little bigger. Zone Finder is a really good tool to help you identify where a possible zone can be placed. And that was just a short recap of our 2015 performance. Clear that, and we will hop into actual production 14. So when you compare 2014 and 2015, the weather patterns for us in Northeast Iowa were about the same. We had really good growing conditions, but for this field, it is just tough to produce a profit when we're raising corn. Corn is a high input crop. So, and I'm going to pull up the soils overview map just to outline where we have soil types. So right in through here, we have a sandy soil type. And within this field, it's in a low-lying area, and this area either drowns out when the creek floods or it burns out due to the sandy soil type. On the end rows, we have heavy compaction from semis and grain carts. So that's the issue going on up there. And then when we come down to the southwest corner, usually this area, last year we had a resistant water hemp and ragweed problem. So that's just a little bit of the field forensics background that I like go through with the producer. Because for me, I need to know what's going on within the field and why we are having a negative return in those certain areas. But majority of this field, or 30 to 40% of this field, can actually produce a really darn good crop. It can produce corn of around 200 to 220. But on the flip side, this area where we have the sand, we struggle to produce 120 to 135 bushels. And this is what makes it so difficult to manage this field, because in 2014, we planted this field to a population of 37,000. We planted it to a smart stack and without resistance, because we knew we had a sandy soil type on that, and we wanted to combat that and protect us. And when we look at that decision, we actually we produced 70 bushels, which out of the 5 years that we have corn history on this, 2014 was the highest yielding year that we had on this field. Profitability wise, we lost $54 an acre. Return on was negative 6%. We had a production efficiency of 198 bushels per $1,000 spent, acreage opportunity ratio of 50%. Next, working capital opportunity of right around $13,500. Total field expenses, $27,000. Total field revenue was $25,000, and then we have a total field profit of negative $1,700. And for 2014, we are using a commodity price of $483 on this field. When we look at 2013, we had soybeans on this field, and this was another year where we produced right around 60 bushel soybeans, and the commodity price was a little higher. We actually made $64 an acre on this. Return on investment was right around 11, almost to 12%. When we're looking at fields, we want to target right around a 10% return on investment. Granted, in today's market conditions, that may not always be possible, but yesterday we had that nice little market rally when the reports came out around 11 o'clock, 12 o'clock, to chase the soybean price up. So, and then scrolling down, then we also do have years where we had lackluster performance, like 2012. in 2012 for us, it was a struggle. The spring was extremely wet, and we had a hard time getting the crops in the ground. Crops got in the ground late, and then almost once the second or third week of June hit, it almost seemed like the rain shut off. So this is what the Lincoln field looks like when we produce 70 bushel corn on it, or yeah, 70 bushel corn. We also did have a right around a $200 insurance payment on this, but we still lost 59 or $95 an acre with a negative return on investment of right around 12%. And then in 2011, this is so in the summer of 2011, we bought a newer combine that had a yield monitor, and this was a learning experience for us. We found out, well, we didn't know how to calibrate the yield monitor. So on this field, we had a soybean yield of 21 bushels. Below our actual production scenario, we have our multi-year average performance scenario that's recapping all of the years from 2011 to 2015. When we look at the percentage of the field profitable, was 41%. Average profit per acre, $52, negative $52. Minimum profit, almost negative $250. Maximum profit, 122. Standard deviation, profit per acre, 133. Average profit per acre, average profit, excuse me, and then we have our average return on investment out of those 5 years at a negative 8%. If you look at the right-hand side of our scenarios, we have actually 3 different scenarios we group things into. Actual production is where we take the actual yield from the fields and then apply that with our crop bud to give our actual scenario. Next, we have planning scenarios. These are those scenarios where you're thinking about implementing for next year. Some of the planning scenarios that we ran through Profit Zone Manager on our own fields were variable rate seeding scenarios where we were seeing how much we were losing in terms of dollars, where we had a water issue, whether it was a broken tile, we needed to add tile. Also ran fungicide and insecticide use cases. This past summer or last year, we had a 55-acre fungicide and insecticide plot, and so we wanted to track how those profit and those decisions made on those areas would play out, so we could make those decisions going into 2015. If we go back to actual production 2014 scenario, we have, so right now we're looking at our profit map. Excuse me. Could everyone put their speakers on mute for? We're getting background noises. Or is it getting better? All right. So here we're looking at the profit map of the Lincoln field. We want to look at the yield map field. So the darker the red, the higher the yield on the field. If we look at the white area, that's the lesser the yield. We want to look at return on investment, break even, yield increase. So on that sandy soil type, we would need to increase yield by 114 bushels to break even on that sandy soil type. Where there's gray area, this is showing where we broke even. Break even commodity price with our chart on the right hand side. Break even expense decrease, and then finally production efficiency. Now I want to open everything up. We have about 10 minutes left. Does anyone have any questions? Hello? Move back to discussion. Does anyone have any questions regarding Profit Zone Manager? So our next webinar will be starting at 11 o'clock, and we will be creating a variable rate planning scenario on the Lincoln field that we have here. Hop back. So one other feature that we have within Profit Zone Manager is the ability to compare different scenarios. So under our field name, we have compare, right next to our field name, we have a drop down options menu of compare scenarios. And this allows us to compare planning scenarios against actual production scenarios, or if we want to compare two actual production scenarios, we can do that also. So what I have already created was a variable rate with a dual hybrid planning scenario along with a corn production 2016 planning scenario with our input prices along with, and then we're going to compare that to our variable rate scenario. So on the left-hand side, we have what 2016 could turn into, which with a field average yield of 170 bushels again, and we're going to be looking at with an expected profit of negative $41 like we have in 2014. Return on investment potential negative 6%, and on this scenario, we're looking at producing 170 bushels, planting a single hybrid at a population of 36,500. So and then if we have a variable rate scenario, we have that on our left-hand side. Next, I want to show, so we're going to jump into actually a CRP scenario. So I previously drew a zone to outline the south end of the Lincoln farmstead to catch all of the sandy soil type. And when we look at the zone performance, originally on that 8.1 acres, we had a zone average yield of 120 bushels, profit of negative $261 with a return on investment of negative 35, almost negative 36% with a total zone profit of negative $2,100. Now, say we roll that area into a pollinator zone, pull up the budget. So we reduce the target yield zone down to negative 100% to make it zero. And then we have a conservation payment of $240 an acre. This is an annual payment. By the time you add in the FSA cost share, that comes out to an annual cost or annual income of right around $20 an acre. For equipment, we amortize that out over 10 years, and everything else we're pulling off. So that is what goes into a crop budget. With our new budget in place, now instead of losing $261, now we're only losing $43. For these alternative revenue scenarios, we're not asking these areas to outcompete corn. We're just asking these areas to lose less than corn production to free up working capital so we can reinvest it into the other areas of the farm. And that is comparing zone performance. See if anyone has any questions. Does anyone have any questions? So we will be going more in depth on creating scenarios, comparing scenarios in our next webinar at 11 o'clock. So Ben, you asked the question, can we import zones that you've made in another program? We will be having that availability coming down the road. Right now, the way we import our zones is that we draw them manually. And Ben Sloan, who is the product manager of Profit Zone Manager, he will have a more definite timeline of when that feature is going to be rolled out. But moving down the road, yes, we will have that ability to import zones. It would have to be in a shapefile format. So if you're using SMS or SST or ArcGIS, just export that file out, and we'll have the ability to upload it. So if anyone else has any questions, I ask you to please join the next webinar at 11 o'clock to see how to create zones, draw zones, and view the performance of each zone and how to improve those areas within your field and help to reallocate working capital to maximize your return on investment and also profitability. So if we don't have have any more questions, we'll be closing out in a half hour starting our next webinar. So I want to thank everyone again for taking time out of their day to join the webinar. We'll have weekly webinars covering various topics within our PZM Essentials webinar. We will be showing different applications of the program, highlighting the capstone projects. We will be having a calendar sent out with the topics that we will be covering, and then in our intermediate planning webinar, we will be showing how to create various scenarios throughout the year. When we get into the summer, we'll be showing how to create in-season nitrogen and fungicide scenarios, and also when we get into fall, we'll be looking at cover crop scenarios along with fertility management and so on and so forth. So I want to thank everyone again for joining. So and I hope to see you at 11.